If I look at the Lehman Barclays Bloomberg Total Return Index series, the fact is we're rolling over, price down, yield up. If we breach the lows, is it like equities where bonds in aggregate have a convexity trend of fear? Do bonds, Ian, we don't know this because we haven't had a real bond market like this. Do we get convexity and fear and sweat and catharsis acceleration in bonds like we're used to talking about in equities?
So I don't think that we're going to see a wholesale capitulation comparable to what we often see in the equity market. And a lot of that comes down to the fact that the people or the institutions that hold treasuries are major central banks, they're major buy and hold investors, insurance companies, et cetera. And so they don't have the same, or don't necessarily have the same incentives to get out and realize those losses that an individual might have. They just take the loss. Exactly.
Ian, I want to squeeze this in before you run because we're lucky we've got you here in New York. Tom and I now have got a long list of people who think we've seen the highs on a 10-year for the year. Steve Major of HSBC, I can think of a ton more. Ian, at 320, what's the risk around that view?
I still think that we have seen the yield peaks for the cycle, but it looked a lot more of a compelling argument when we were at 251 just recently. It's certainly going to be an interesting next 2 or 3 weeks in the run-up to the Fed. If we break 350, it will be between now and the 21st of September, and that'll be a massive buying opportunity for a lot of investors.
There we go.